Bitcoin just had its best week in over 2 years, up 22%, knocking on the door of 80,000 US dollars, and right on schedule. The internet is screaming out that the bull market is back. Well, maybe, but I've watched enough of these to know that the most violent, exciting, convincing rallies don't happen in bull markets. They happen often in bear markets. So today, I want to give you both barrels, exactly why Bitcoin exploded this week and why the 4-year cycle is quietly whispering that this bear might not just be finished just yet. Let's go. Welcome to the New Rich Academy weekly briefing. I'm Troy Harris. It is a Bitcoin heavy one today because Bitcoin earned it this week. 10 minutes, let's get stuck in. First, the scoreboard, because it's a big one. Bitcoin started the week down around 63,000 US dollars. As I record, it's around about that 79,000 US dollar mark after tagging a high about 79.5, nearly reaching 80,000. Now that is a 22%, if my maths is correct, a 22% move in just a matter of days. It's the best single week since March 2024, more than 2 years ago. For weeks, I've been telling you Bitcoin was grinding through a long, cold stretch. This week, it came alive. But before you remortgage the house and do all those kinds of things and get into Bitcoin, hold that excitement for about 90 seconds because how it moved matters more than how far. 4 things lit the fuse, and only one of them is really about Bitcoin itself. So let's get started on number 1, and politics, yeah? President Trump hauled a room full of crypto executives and regulators into the White House and started publicly pushing the Clarity Act, the big bill that would finally give US crypto clear rules. Now, it's not law just yet, but markets don't wait for law, do they? They trade the odds, and the odds of it being passed just trumped dramatically. Number 2, and this is the big mechanical one, there's a short squeeze, a monster one. More than $4 billion of bets against Bitcoin got forcibly closed as the price moved up. Now, one of the largest liquidation events on record is basically what just took place. So when you bet against Bitcoin and it climbs, you're forced to buy to close your bet, right? And that buying then moves that price even higher. So this forces more people out, and it's kind of like a chain reaction. A big chunk of this week's fireworks and the price moving up so dramatically and quickly was just that. It wasn't that a bunch of fresh believers of Bitcoin come in, but it was scared sellers basically being pushed out the door. Now, number 3, the US Treasury quietly doubled a bond buyback program. This is a fancy way of saying more money is going to be printed, right? That's how they say these things of printing money. Bitcoin loves loose money. Number 4, the big Bitcoin ETFs pulled in around 1.9 billion, with a B, dollars this week, basically $2 billion. That's their strongest week of the entire year. Now, that one's genuinely encouraging because that's actually real money. It's not leveraged like the other ones I just mentioned. So it's a real move with real fuel, but heavily juiced by that squeeze. Keep that in your back pocket. Now, to the big question, is the bear market actually over? Well, to answer that, you need the 4-year Bitcoin cycle. You need to know how it actually works. So here's the 90-second version. Roughly every 4 years, Bitcoin's new supply gets cut in half, and that's called the Bitcoin halving. Historically, 12 to 18 months after each halving, Bitcoin roars to a new record, then it crashes hard. Then it grinds sideways for a couple of years, bottoming out roughly 2.5 years after the halving. This has been done like clockwork, right? Right before the next one kicks the whole thing off, and then we have another bull market, and then it runs, it's been running like this for more or less, just over the last 10 or 12 years. Now, the last halving was in April 2024, and Bitcoin peaked in October 2025, about 18 months later, bang on schedule. All right, that's how Bitcoin works. It literally works on schedule. So this means if the old clock still ticks, we are right in the kind of ugly middle bit right now, and we're still firm in the bear if the cycle is still in place. And the cycle has a few things to say about whether it is done. Now, here's the uncomfortable part. The case that this week's party might be premature, I'm going to split into 3 different pieces. Piece number 1 is what I call depth. Now, in past cycles, Bitcoin didn't just dip, it got demolished, right? Peak to bottom, it fell around nearly 80% last cycle, 80+% the 2 cycles before that. This time, at its worst back in June, it was only down around 50% from its record. Now, the optimists call that progress, maybe a gentler, more grown-up bear cycle, but the cycle purists, kind of like myself, look at it and say something much colder, that this bear market hasn't done its work yet. It hasn't hurt us enough for long enough to match every bottom that's come before in previous cycles. Now, piece number 2 is one I talk about all the time, and that is timing. Now, we're only about 10 months into this downturn from the October peak last year. Historically, the bear market phase runs closer to 12 months, and the big cycle watchers, firms like VanEck and, these large firms, put the likely bottom somewhere between October this year to January next year. Now, on that clock, we might not be at the finish line just yet of this bear market. We might be early. Time's only going to tell. Piece number 3, and this is the one that ties it to what I'm talking about today, is what I call the final flush. Now, in the last 2 cycles, the pattern was consolidate, then one last gut-wrenching drop, and then the new bull begins. Now, here's the kicker though. Even some of the bulls agree. One fund manager I saw, I think it was on CNBC this week, said flat out that she thinks the bear market is nearly over. But she's still expecting one final flush out of about, another 20-odd% first to bring it in line with history. One well-known veteran even mapped a worst-case slide back toward the $30,000 to $50,000 zone if support cracks. And that's still where I think we're going. I still think we're going to be touching near that $40,000-ish area or close to it. Maybe not touch it exactly, but go close to it. Now, if we put it together, and this week's 22% rocket looks awfully familiar, right? It's squeeze driven. We're definitely overbought at the moment. The momentum gauges are stretched to their hottest in 2 years, and crucially, even at $79,000 which it peaked at, or whatever it was, Bitcoin is still well below its January high and miles below its record. A rally that stopped short of the previous peak is not a breakout, it's a lower high. Now, what does a lower high do? They do exactly what bear market rallies produce, right? Bear markets, they don't die quickly. They die by tricking you into celebrating 3 or 4 times on the way down. Now, I promised both barrels, and I meant it when I said that, okay? Because I'm not here to scare you into a different mistake. The other camp says the 4-year cycle is dead, that Bitcoin's grown up. Standard Chartered, I believe it was, this week reaffirmed a $100,000 target by year end. I just can't see it happening. Arguing this has been the shallowest bear ever, precisely because big institutions and ETFs now put a floor under it. That's what they're kind of arguing, right? Grayscale, which is another big firm, their research team said the bottom may already be in because Bitcoin now dances to interest rates in the economy. I still don't believe that. That's my opinion, not to a mining schedule from a decade ago. This is what they're saying. I still believe Bitcoin still beats to its own drum. And I have a feeling that these big firms are going to get caught out by Bitcoin's rhythm. This week's ETF inflows are real money. They're not leveraged. So that view, though, does give it some teeth, but we'll just have to see. So the honest answer is the bear market actually over. Well, nobody actually knows that. And the smartest people in the room are openly split. What I can tell you is what to watch next. This Friday, the new head of the US Central Bank gives a major speech. If he sounds tough on inflation and the market's already pricing a decent chance of another rate rise, this rally could stall as fast as it started. Everything Bitcoin is doing right now is leaning on loose money and good vibes. There's nothing material about it, and that's what my concern is. I do not believe the bear market is over. Both can change in a single sentence from a central banker, but once again, Bitcoin ultimately beats to its own drum. Now, quickly, for the rest of the board, quickly cover gold and property. Gold's holding up around 4,400 an ounce on the ongoing Middle East tension. And Australian property is still soft. The Reserve Bank on hold. Prices drifting lower in Sydney and Melbourne, but there's no change to the story that we dug into last week. Bitcoin was the headline this week, and it deserved to be. So here's your signal for the week. The single most expensive thing you can do in a moment like this is let one green week rewrite your entire plan. Think about the 2 people this week creates. Person 1 Panic sold near the June lows. They swore off Bitcoin forever and is now watching it rip up, and they're feeling sick about it. Person 2 is about to FOMO in at 79,000 US dollars at the top of a squeeze, convinced the bull market is back right before a possible final flush. Now, here's the thing. Those two people made the exact same mistake. Both let the price tell them what to think instead of deciding what they thought before the price actually moved. One reacted to red, the other's about to react to green. It's the same error, it's just in the opposite direction. The 4-year cycle is a useful map, but it's a map, exactly that. It's a map, right? It's not a clock. It's not a crystal ball. For years, people used it to avoid thinking. The new rich do not outsource their decisions to a pattern, and they do not outsource them to a candle either. Just because we've had one green candle up 22%, my theory has not changed. They decide their plan in the quiet, so the noise, a 22% up week, a scary headline, something some central banker says, it can't bully them into a move they're going to regret. Prepare in the calm, don't predict in the storm. As I always say, just keep feeding the beast. In my opinion, dollar cost average in the long term, Bitcoin always wins. Your one action, and it takes just 2 minutes, write down 2 numbers. Write down one number, right, which is a price where you'd genuinely be happy to buy Bitcoin if it fell to that price. And the second number, right, a price where you'd feel nervous or want to trim your position down maybe. Write them down while you're calm and nothing is on fire. We never make good decisions when we're emotionally unstable, right? Because the whole game this week is about emotions. Greed is on the way up, fear is on the way down, but come next week, it could be turned on its head and could be the other way around again. So the only known cure for deciding in a panic is to have already decided before you were not in a panic. This is not financial advice, just the homework of someone who wants to still be here next cycle, and I hope you want to be here as well. So the comment of the week, so should I buy now or not? Just say it, Troy. Well, mate, if the honest answer were that simple, this would be a one-word podcast. What I'll say is this: never let FOMO make a decision your plan did not already make. Write the numbers down, trust the plan, not the big green candle. Make sure you hit like and subscribe and all that stuff so next week lands in your feed, and we'll see whether this rally actually had legs or whether it was just a trapdoor. I'm Troy Harris. Prepare, don't predict, and I'll see you next week.